All right, hello everyone. How's everybody doing today? Good? Okay, so you can see we finally have a launch date, which is May 15, 2020. So mark that on your calendar, and if you didn't get on the priority list yet, just continue to email me at tradingwithjasmine@gmail.com. The team has worked very hard to put this together, and it is going to be amazing. So you don't want to miss out on it. That is for sure. Support is here with me to answer any questions, so keep the emails coming and ask questions. All right, so I think today we're going to take it a little bit on the slow side just because what we are seeing with the market. So let's go to that page. And thanks all for your comments and all. Some of them are very cute, and and also we've been taking into what everybody needs and really putting things together nicely for you. All right, so you can see that equity markets, I would say, is very resilient. What we have seen so far is it's pulled back to overnight demands and pretty much rallied from those areas, and we'll go through that again. We have fallen from supply levels, but again, we're meeting the same areas again. So I feel like for today, yesterday we were already pushing it once, and we did all right with some of the supply levels they gave us. Today, again, now we're exactly in the same range again, and so we're going to be testing back and forth the third time already. So caution again, but even more so today. But we'll go over all that as well, right? Dollar also, ever since the volatility is shown since the whole virus started, well, at least when it affected the stock market anyway, started way before that. But when it affected the stock market and then with the Fed stimulus, we saw great dollar moves, but now it has gone back into a range, which is what it's done. It did that for quite a while before the volatility came in. It hurt some of the brokers, I'm sure, because it really had not shown volatility much in the currency markets for quite some time until that happened. And now we're kind of falling back into that range again. As when you have stock market complacency, that's when you also have dollar pretty much not moving anywhere. So we do have some CPI news coming out today. Hopefully that can create some movement, but nothing is going to be truly fresh as well in terms of that market, with the currencies. You also have Kiwi news also coming out later at the end of the New York close. That's when theirs will come out. So be on the watch for that if you're trading the Kiwi. All right, so let us get into the charts. Okay, so you can see where the S&P is at. Again, remember, what I find this interesting is I've been up for quite some time, and the news probably doesn't know that you're up like different time zones or whatever. I'm not sure, but I know when at the very beginning, because the DAX was down, and they definitely had headlines saying that because the uncertainty of the of what's the rules coming in for how we're going to open up again. This is causing the market to be down, and then all of a sudden, as we flip into the morning, and you can see all the markets have flipped back to the upside. Now all of a sudden it became, oh, well, because of the easing of the lockdown, now the markets are rising. So I'm like, okay, you just said when the market was going down that it was because of the lockdown. Now you're saying the market is going up because of the easing of the lockdown. So what is it? So the news is just kind of telling you kind of what's already happened, just like your lagging indicators. It's almost the same thing basically. But let's take a look at this S&P. So you can see here that since we've hit this 60-minute zone, we have taken a fall out to more or less almost down to that 4-hour area opposing, and now we have come back into it. So if we want to take any trades inside of here, it is going to be low probability trades. I do see some sort of 5-minute areas of demand that's possible, but like I said, if you are even going to try it, definitely decrease position size. You got to watch out for any sort of opposing zone also when it's inside its range, because your supply and demand imbalance is, you can see, is not there. So therefore, it becomes a lot more difficult to try to get that bigger target. Once we get down a little bit lower, of course, we are going to hit down into some overnight demand at the 2860. This was the previous overnight it held, and then down below. You know, if you take a look at it, it's all been overnight demands that we've been holding. So that is showing market is still very much to the strong side. And like Sam Sines always said, it's designed to go up over time. So it's not surprising that people are jumping in ahead of the curve. Now, what's even better yet is they are starting to get into more technicals, just because they're trying to, you know, get the average person, and it's just pretty funny. They're technicals, just as lagging as everything else. Let me just make this black so I can see it. Okay, so we are getting a little bit closer to these two upper zones, which we have not reached yet. So that is still a little bit higher at that 3002 to 3034 and 3081. And like I said, there is some little 5-minute zones in here, but the range it's inside of a very large range. So even with these, you're going to have to watch to see how prices, if there's anything opposing, because you can see this very first area, you have a little 5-minute here, you also have a little 5-minute there. So just be careful with that. And if you want to take a look at the bigger part of things is you can see where your overnight highs and lows are. Right? Overnight high is still being created. We still have about a little less than an hour and a half for it to continue to create. Right now it's at 29.36. It is right now below yesterday's high of 29.47. Overnight low is 28.94.50, and also above yesterday's low of 28.89.75. So not only are we inside of this whole area, but we're also inside of yesterday's high and low as well. So white and whippy. I mean, as traders, we want the volatility. You know, you can see that the volatility, I mean, before it would take forever to get a couple of S&P points, right? Now it's like a blink of an eye, you get a couple of points. So you definitely want the volatility. If you're looking for the long-term investing, yeah, when it comes into a higher time frame zone, that's when you're trying to, you know, get onto it. At the bottom, it's always tricky, because at the bottom is where you're going to get that whipsaw to knock some people out. right? See, this is actually already, a very nice bounce back up, a very quick bounce back. But if you were able to catch it down, you had these two daily levels on top of each other and below all those lows. So as you can see, so right there, and then once you get in, but you can see where you really start to have trouble is right down here. And that's usually when the news is going to come in and say, oh, well, are we going to retest the lows? Are we going to do this? Are we going to do that? And that's where people get a little bit shaken out. Then you miss this whole move. I will say one thing, it is a bit slowing down below this. You can see this 3,000 to 3,100. Right now it is, doesn't mean that, it's, some people are looking at it as possibly trying to reverse, which it could, but it doesn't exactly mean it right now. Because so far, in terms of what I've seen with, with all the demands, it's still, we really have not had to test below an overnight low so far. Today, who knows? That may be different. But as far as what we've seen through this whole range so far, we have not had to test any overnight lows yet. So once we start to do that, then perhaps then we may start to see a little, not be able to reach the top and then start to come around, then start to break some of these demands. But you can just tell that it's just holding up right in this whole line right now. So you got to just take it for what it's showing you at the moment, go with it. And if it starts to show you a different sign, then you start to turn around. So meaning, doesn't mean that if you're day trading, you can't take shorts or longs or whatever. You can see that you could do both, but you just got to realize where your targets are. If you're looking for trying to go against it and you're looking for targets that are, below, overnight lows and everything, you're not going to get it because it's not reaching back down there. So it's more or less reaching the opposing demand zone as it continues to move up. That could change too, but for right now, that's what it's doing. So that's what I would continue to hang on to at the moment until it shows me something different, right? And yeah, and if you take a look at, and if we go into sector-wise, which sector has been the strongest right now, right? Besides any sort of, like, any sort of drug findings, or that's different. They'll take off on its own. But in terms of just in general, which one has been the strongest, and it makes some sense. With people being in lockdown, they still have to use technology. They still use a lot of the FANG stocks, and so it makes a lot of sense that the Nasdaq in itself is rallying more than the other markets, right? Than the other markets that may struggle a little bit more, such as the Dow, small caps, they may struggle a little bit more. So if you just think about it, but also realize too, as we start to open up, as long as everything goes okay and people start to get comfortable, these stocks have been beaten down, they're going to come up pretty quickly too if everything goes okay, right? And then that's just going to send these other ones more than likely just higher, So, all right. So keep that in mind. It's pretty much the same for all the equities for the SPY. Just a bit of a reminder that our upper zone is still coming in at that 316, 308. And as you can see here, right, all the gaps inside of here are within that range too as well. So this area, this is all within that large overall area. And really, once you come out of it, it is going to be closer to down below into this, right, if you take a look at it. All right. All right, let's go to the strong one. So the Nasdaq was the one that the others actually gave us a pretty good fallback from yesterday's level. The Nasdaq was the one that had some pretty close demand. You can see right here. So you can see this 5-minute area. It hit in, did give you a nice little move, but it was met by some new demand, and then that's what took you up higher. And you can see we have continued to move from that area too as well. And in terms of what's above current price, pretty much the last little bit, I think maybe I have it on the 4-hour. But with the Nasdaq for is what it's doing, you just want to continue to go with it. Hasn't told you too much to go against it yet. If it will, it'll show you. But at the moment, a lot of so even coming back up here, we can start to look for things. You're going to have the gap, and then closer to the 95.52, 96.44 in that general area, you can look again. But that's pretty much your last lines inside of the Nasdaq once we get up there before if it's going to try to make new highs again. And you can see too, near the highs, we did have a 4-hour zone that has continued to take prices even higher. It's pretty much held every 4-hour zone. We even had one here too. It looks like it pulled back too. So it's continued to hold every 4-hour zone too on top of that. And same thing with the others. It's going to have some overnight, little 5-minute zones, but all within this upper range. With this too, I would look to see if with the stock market, I would say the main thing is there is a couple of markets, the bonds and the yen, who are kind of near the lows. So we don't want those markets, if this is going to continue higher, to turn around. So we'll go through that too in a moment. Yeah, and then this is the overnight demand too again. See, so again, it's just hanging on to, it came back into the overnight demand again and continue to rally out. So even though this is overnight, it hit once already, but then you can see it hit back down again already and rallied out again one more time. All overnight, still showing pretty good strength overall in general with the Nasdaq. If you go into the right, sector-wise, you can see that just the change here. Pretty much everybody except HPQ. Intel 2 looks like a little bit red, but everybody else pretty green, and this one looks a little bit just even. Let's see if there's any kind of, where's Apple going to? Yeah, so a lot of them are same thing, reaching back to highs. It's even up at 317.63. I wonder if that's even, where is the high? 27. Yeah, so we're very close to the highs here. So we're about 317, right about there. That's what we're testing with Apple today. Okay. Is it trying to tell me something? It's not erasing. Okay. There you go. All right, and let me see. Apple and I think that's good. Cisco. Maybe take a look at Cisco to see where that's at too. That's another 44.20. Kind of interesting though. Cisco's kind of reaching back up into this area. 44.20. I mean, it's a messy weekly area, but it's still not quite though. So it could still run a little bit, but definitely getting up there in terms of getting near an area of possible supply. So something to watch out for, and a couple of dollars more. All right, so like I said, right now it's not showing us anything, too outstandingly different. So we'll continue to go with the momentum, but we are nearing maybe a little bit higher into some of those upper zones. So then we'll watch to see if there's some selling pressure comes in, because then that could be where the S&P reaches the next area. Then the Nasdaq reaches up into those higher areas, and then stocks such as Cisco and stuff could be reaching those monthly areas too as well. So if everything confluences together, that can show a little bit of selling pressure too then. All right, let's take a look at the Qs. So with the Qs, it should be fairly similar. Yeah, so Qs too. And you can see once you start, so after it hit this area of demand, now it's formed also a little bit of demand inside of there. We know on taking a look at the Nasdaq that we have hit these before on the way up. So one thing that we do know is that if there is some supply that starts to come and bring this down, these are, even though it looks fresh on here, we know that in the Globex session that they have been tested at least once before, the demands on the move up inside of the Nasdaq. So that's one thing you want to be aware of after coming off of this closer demand, and you have a gap inside there. We have tested a lot of these on the overnight sessions on the move back up to this area. All right. So with the Russell yesterday, we came up into this 16-minute zone. Gave you a nice move all the way back down to the lows. So again, like I said, if you're looking for much more than that at the moment, you can see prices are still basically holding up at its overall. You can see right here on the 240, just hanging out at its 240 zone. So to me, it's tested both sides right now already, the lower 240 and the upper 60. And so anything in between is just going to be a lot lower quality, just in general, right? So just so you know that. And then of course we have the upper zone that we didn't quite reach yet, and the lower 240 comes below this low at the 1216, 1203. All right. All right, let's take a look at the Dow. The Dow also did come back to our 5-minute zone. And so it's interesting, we're back up there with the Russell, we're back up there with the Dow. You can see too, so this was the area we had yesterday. It came up, did that initial drop down. So, you can see in this situation, people, if you move stops and all, it didn't really take you out. If you are it did make that new low before turning back up again. So the Dow is still a little bit weaker than such as the Nasdaq or the S&P. It looks like, because it didn't quite get back to its 60-minute overall area. So that's one thing. If there is some sort of weakness inside of the Dow, there are a couple of things opening up. They said the Disneyland in Shanghai opened up. I think tickets sold out in 15 minutes or so, but they do have to practice a little bit of distancing. But overall, people are just, they want to get out, so not afraid at the moment to try to get out. So that's a good thing for the parks. So again, with this market too, you know, the higher area is also still up at the 24,576 to 24,718. And again, all of these have 5 minutes down below at the current moment. So now what it is you're going to be facing the same 5-minute area against some new overnight 5-minute areas. Which one's going to win out? I mean, if you're going to try them, you know, protect yourself maybe once it gets to the opposing area. If it didn't take this out, you might have to watch this area again if you're going to go against it. If it does take it out, if it does pull back, you perhaps can get a larger move if it does come back into it. But anything within here is going to be that lower probability. Okay. All right. So now let's take a look, and we will get into a couple of stocks, but that could be a little bit longer term. So let's go into the let's see here. So we've got here on crude oil. All right, let's take a look at the bigger picture first before we move into where we are there. On the Dow, oh, you're talking about the 60-minute? Yeah, that 60-minute, I had it in there yesterday. I had the 5-minute and the 60-minute. The only thing I was looking at if we are going to show pressure, you can watch that area for sure. But I'm seeing that since the other markets kind of hit it already, that same zone, perhaps is not as high quality if we do see some good buying pressure coming in there. So that's the only reason for that. But you could definitely keep it on your radar. You know, anything inside of there, I wouldn't keep it as, you know, I would wait. I would look to see as it comes into it, just because, like I said, a lot of it's tested on both sides. Yeah. All right, so let's take a look at what has happened here with crude. So crude, ever since it hit below 10, now we've rallied out. So now we're testing here. You can see we've hit it quite a few times right now. Looks like to me it's holding below this whole area at the 35 right now, and but it's hanging in there. It looks like it's a little bit hanging in, just like the equities are hanging in. So they look like they are somewhat moving together, even with the cuts that came overnight with Saudi Arabia again. That has not deterred it too much yet, but we'll see as prices start to show up if that's going to be the case. But that's where we are right now in the bigger picture. And of course, your gaps are still going to be coming in higher. So we're still below our retested. We're still below our retested 240 zone, and then way below our 60 and 240 that are gap areas. Now, so you can see this overnight was created on the move up. Once it broke out, it created a little overnight demand. Right now, it has made this overnight high of 29.53. Which is pretty much, that overnight high is pretty much yesterday's high. So I think the difficulty with this right now, in terms of where it's at, is there's not a whole lot fresh. So you can, it's pretty much like equities. I mean, if you wanted to take some small time frame, you can just see everything's kind of been tested on the way down, right? Everything tested, tested, tested. And even with this market too, I would wait to see if some supply, forms in below those gap areas, just because everything has been tested at least once before. See if you keep going back. Oh, run out of room. Right, so you can see this is where really that whole drop came from, but it has been tested once, almost tested again, and so it's not a fresh area either at 2620 to 2640. Okay, and overnight low right now is at 24.21. Let's see, 24.21. So that's going to take you down right inside of here. And then there's a pretty large gap that's right below that. So you can see this, the overnight low is coming in right around at this 24, right about there. Right about there, like right inside of here. And then the gap below is coming in a lot lower, almost at 2055 to 1955. Okay. Yeah, I mean, inflation is always on the watch. I think what it is right now is what takes precedence right now. And so, I mean, none of the central banks really want zero interest rates, but yet, you're still seeing cuts go around. So the question is, I mean, is it really, is that going to really happen? Like, can they sustain that? I mean, if we take a look at the bonds, it does look like it's falling back. So that would suggest that rates are going to go up. So at the moment, it does look like that scenario that we're getting right now, whereas before, bonds were just moving higher. So that would suggest the reverse. But it does look like that's at the moment what's happening. And yeah, I mean, all those factors, they're all going to look at, of course, inflation, unemployment, all that. But we also know at these extraordinary times, all the data is going to be swayed to one way as well. So, all right. So that's on crude. Yesterday we did have a move into our nat gas area. So we had this level here in nat gas. Nice little pop up above the previous high. And you can see right up into the supply zone. Did test, pretty much whole zone, but, was a little bit of, you can see this is usually where if you're sitting there looking at it, you probably changed your mind, right? If you're sitting there staring at it and you're like, ooh, this is way too many big green candles. No. Even though sometimes you can get like really good entry because you're staring at it and you see it like right at the top and you're like, oh, I see it, but then you're still scared and then actually this is your lowest risk that you can take ever because it's right sitting up at the top and you can put your stuff right above and just risk very low, but you don't even want to do that at the moment because you're like a deer in headlights just looking at the thing. And it takes time too to get over that, but in the beginning, that's what you do because you sit and stare at it. And then before you know it, like a few hours later, then you're like, Oh, why didn't I take it? But anyway, that's our area. And then now, if it continues to fall, then that's the area you're supposed to get in. Otherwise, you're gonna have to wait for the higher ones. Now, this one is overnight, so I'll be a little bit more careful with it because it is overnight. But you can see it once it has hit into these two, also coming off of that zone. All right, you did okay. Yeah, it was scary because well, remember too, like some of these markets are a little bit more just thinner in general. So it can be, big movers, right? So crude can be like that, nat gas can be like that. You have the Swissy that can be like that. There's a few markets that you don't have. I mean, even something such as the Nasdaq, it moves in such a. It can be a very momentum based as well, but it is technically, sound. With these, you got to take a look. I mean, nat gas is a little bit better, but you can see some of the markets. The more wicks it has, right? You can see right there. The more wicks it has, the more you can just see where what can have that extra volatility coming in, right? So some people, yeah, you may not want to trade it just for that reason. Yeah. All right. Let's move on to, let's just take a quick look at so what I was saying about the bonds is, well, the nat gas is going to be testing, I mean, the real place it hasn't tested is way lower on the 15, but it is going to be testing, let me go back to this. So it's pretty much going to come back to test this overall area again. We do have another one a little bit lower at 1627, 1598. So remember, this was the 50 where it struggled, it had some trouble, it came back, it went, so it's following technically in terms of, this is the first time it hit the daily 50. It fell back. Then you can see it went up and then became demand. Now you can see it went all the way up to the 200 and now fell all the way back. But this area is not going to be fresh anymore in terms of coming back for the daily 50 again. So it is the lower area, I would still say, is the fresher one, and the 15-minute that's below this as well. Okay. Sure. Let me just take so this is the look of the bonds right now, where we have the equity sitting at highs and the bonds sitting at, and it's important because you can see here. So you can see, right, if we start to break this lower zone, more than likely that's going to send the equities higher, right? Right now you can see if we test back down here again, it does look like it's holding this close supply at the moment. So these things are pointing to a little bit more of equity moving a little higher at the moment. And then with the U.S., same thing too. But, in terms of directional, does it really have direction? No, it's just holding at the bottom of the range. And we've known, even from the dollar, that bottom of the range doesn't mean that things are over. It just looks like it's over because it's fallen all the way down to the lows. But bottom of the range doesn't mean it's over, just like top of the range. Every time it reaches the top, you think, oh yeah, it's going here. Meanwhile, it falls back down again because it's inside of a range, right? So not a whole lot to do with the bonds, but what you could do with the bonds is watch to see if we do get more selling pressure coming in, and that would take the equities higher. So then you want to be a little bit more careful on any sort of equity short if you don't get a bonds to stabilize. But a lot of times bonds are slower than equities in general anyway. Okay. Yeah, we could take a look at that. Let's see. Yeah, so you can see this gap down. Like I said, a lot of times when everybody's talking about it already, you also got to realize, yeah, hey, we're getting, getting to be a little bit, right? You got to be a little bit more careful. So now it looks like it's caught between, let's go take a look at the, okay. Let me just see what it looks like on a weekly. All right, so on a weekly, so one thing it has done is looks like it's held the lows, right? So it's held the lows here. Nowhere near the high at 22,000. And so it's pretty much held the lows on after making near the 4,000, and then is holding at weekly supply up above, and now looks like we're just inside of there. It's tested this area. Let me take a look at this area. So it tested this area, it looks like once, and then came back in again. And then now looks like it tested it again. So you can see this sort of weekly supply here. On the second move, it did come down to test the lows on the second move. So this one coming up, so this is going to be the same thing. You may have some demand in here, but it is going to be a little bit range. If you wanted to take a shot, like I said, these look like it should be a little bit lower position size, but that's going to be at the let's see, 14. Yeah, so more likely it's going to be like these two, or this lower one down below. Now, with this one, so you are having a gap here. It's not going to be fresh if it comes back up again, because you can see it's been here numerous times. However, a push to a new high will take you back in a little bit deeper into this weekly again. Then you can look at it again if you're looking to try to short it again. And you can see where the larger area it's really coming from. That's going to be the whole, if it does get back up there, that's going to be that whole area also. Again, to watch out for a new push into that upper zone too as well. But this one's slowly getting eaten up on both sides, I would say, slowly. Okay. I believe, I haven't myself, but I believe a lot of people are for the people that do, maybe they have a little bit more comments on it. I noticed too with some of the currencies as well, that because they have especially for the futures, you have your standard one, then you have your mini, and then you have your micro, and I've noticed that you more or less want to do one or the other, the standard or the micro. The mini is the one that looks the lightest to me, so it seems like you want to go either one of the direction, and the mini is the one that's going to be the lightest volume. They all have to move together, but if you're looking for a little bit more volume, looks like either the standard or the micro. Okay. All right, so let's now move to a dollar. Okay, so you can see here what we are having so far coming into today is while the equity has turned around again, we are having these markets such as the dollar, the bonds, the yen, all kind of hanging back down at their lows. So if they continue to move lower, that's going to send the equities to the next area. Again, if you want to play these in between, just realize this is what it looks like, right? So first of all, with the dollar, we are in this area here. All right, so this is completely, it can't get any more, I can't see getting any more sideways in this except that it's just going to stay here and not hardly move. That's the only thing else I could see it do, but it's just gone completely, if you want to say anything doesn't have any sort of imbalance whatsoever, right now that's where we're at right now. So with that scenario too, now we have this coming in. So yesterday we had a couple of shorts that we could still take in equities and stuff, but now today you can see with this it's just really become so more caution today more than the other days. Like I said, if you want to take some things because you're a day trader that's in between these ranges, just realize where I would just go for your first opposing inside of the whatever time frame you're trading, because you're not finding direction at the moment. And until if we start to break this a little bit more, and then if equity starts to break higher, or if this comes back down and then starts to come back up again and equities fall back down again, that's a whole different scenario there. But as far as the way it looks right now coming into this open, this is what we're looking at. And so if you're looking at the other markets, the euro is going to be also going to be in this scenario too. And the Aussie and the Kiwi is going to be a little bit more like the stock market, but the Kiwi does have news later today. So, but but you can see here on the 15-minute, we have started to form a little bit of demands inside. You can see right on this little breakout, this 15-minute right there, and then you can see some lower areas here. But again, very, very range bound within that dollar. So if you wanted to take some of these, you just got to realize where the opposing zones are, right? So if you wanted to take some of these, you have to realize where your first opposing zone is. So it could look fine, but if it comes back down with some new supply above it, then you got to be aware of that. Okay. Yeah. And the difference with the Aussie is a little bit more of the stock market. So what I noticed with the Aussie is that so it went from the 240, it touched the 240 first, then it went a little bit deeper, but you can see what was right underneath that 240. I didn't initially put it together, but you can see it really just dropped in between the 240 and the daily. And now again, so where do we need it to go to next is if we're going to bring this to the next level on the stock market, the next level inside of the Aussie, that's going to be higher into these upper zones. You could see the 67.47, 67.70. That one's already tested once. The two fresh zones is really the ones up higher. Okay. Yes, correct. And for right now, it's not always going to be that way. It wasn't that way for a very long time. The Aussie, what it'll do is it goes into modes of where it'll be mainly affected by the metals, right? A lot of times, and then which is mainly affected by China. So a lot of times what happens is as it goes into the overnight session, it gets mainly affected by those markets. But because of this whole virus thing, which, you know, went throughout the whole globe and is affecting, all the mining and production and everything, and whether, they get back into and start using it again. So now that's why it's moving the same as this stock market, because it has a lot to do with, who comes back, into, the world again, and using things again. So that's very much impacted by it, just like the stock market. But it's not always going to be this way. Once this whole thing clears, it's going to go back to, okay, what's going on with its own GDP, its unemployment, and then whatever happens with with the usage as it goes on around the world. And same thing with the Kiwis, should be very similar, but a little bit weaker than the. But we could take a quick little look at that. Yep. And you can see too, same thing here, right? So weaker in general because it's a market that's been beaten up initially with all of the everything that happened with the non-usage and starting to claw its way back. But you can see same exact thing is happening here where, do you see the general picture with all the markets? I mean, it's almost all of them look the same. So, if you made money on, the upside, the downside, some of the other ones we took on the up and down, and then you coming into today, who knows how long, if it's going to take today or tomorrow, whatever, to kind of get itself out of here. If you're coming in today, this is the day that either you want to say, okay, let me be careful, extremely careful, or let me really, bring down the position size, right? Or let me really go for some quick profits. Let's not, it's not always going to be, 3-1 or 5-1 or whatever. It could be all it's going to offer you until it breaks out of the range is 1-1, 2-1. So you got to decide if that's for you. You got to listen to the charts, right? A lot of people, they just, you put things in different areas because, like I said, a lot of times what happens is we don't focus on that. We focus on, okay, let me start trading today. Here we go. All right, looks good. Okay, 5-minute chart. We're looking good. Let me try to enter here, and that's all you see. You have no clue. You're thinking this 5-minute is the same as a 5-minute down here, right? And you can just see you're taking a 5-minute here and taking a 5-minute here are two completely different trades. Can you try them both? You could try them both. I mean, they're going to be small risks regardless, right? But one of them, you have much more room. The other one is, well, it can go this, right? So that's where the difference comes in. And that's why sometimes you may make a lot of money down here. And then all of a sudden you get up here and you're getting chopped up on both sides, right? You're getting chopped up on the short side. You're getting chopped up on the long side. And, and even gold was like that for a little while too. Yeah. That's funny. But, yeah, so the more you can try to incorporate other parts of it, because trading, I think there's a fine line with everything in terms of being, so some of you are going to start out just being extremely aggressive, right? You're just going to be, like me, like, I don't care about sim. I don't care about size. I don't care about risk. Let me just go, I just don't stop me. I don't even care that I don't even know what I'm doing. Just let me go. And then others of you are going to be like, oh, I've been on sim for, 5-6 years, and then there's some of you that's going to be like, okay, I'm going to dabble in a little bit. So what I'm trying to say is if you start to look at these things and, why do you need multiple time frame? You need multiple time frame for this purpose. It doesn't matter what you're trading, if you're trading small time frame, if you're trading for larger trades, it's just good to look at different time frames so that you know the picture, and look at different markets so you know the picture. You'd be like, oh, I'm trading the Nasdaq. Why do I need to look at anything else? Because the others are going to tell you a picture that you're not gonna see on the Nasdaq, right? But anyway, so that's the message for today. So hopefully you listen and you trade very wisely coming into today, possibly even into tomorrow. We shall see. But hopefully we get out of this range soon and we create some good new opportunities. But meanwhile, the next, of course, exciting thing is the launch, and that is definitely going to be on Friday. And you will love it. And just get on the priority list. That's all you need to do. Just to look at things. But I believe that you will love it. Everybody's been working very hard to get things the way that what everybody needs, and covers many different areas. So you will be happy. All right, thanks everyone, and I will see you guys. I believe Thursday. Oh, you're right. I did. Okay. They're not close at the moment. I'll cover them Thursday for sure. I did have a list. Oh, yeah. But they're not close at the moment. It's okay. We'll cover them on Thursday for sure. Wow. I can't believe, how did I skip that whole thing? That was bad of me. Yeah. We'll definitely cover them on Thursday. Yeah.